Hello, my name is Anthony Siccaro. I'm founder and president of Providence Financial and Insurance Services located in the heart of the San Fernando Valley in Woodland Hills, California. I'm also an estate planning attorney, and for 5 years running, I was host of the Providence Financial Retirement Show, which aired every Saturday on AM 870. KRL Lays the Answer. And periodically, I like to put out updates via video, primarily for my clients, just to keep everyone up to date with my thoughts and what's going on in the environment. It's been about a couple of weeks since I've done that, so felt time to bring you a quick update, although probably shorter than most, which you're probably going to be very thankful of. And if you are a client of mine, I can't thank you enough for your trust, your business. Definitely appreciated. And for your referrals. 53% of what we did last year was a result of people referring friends and family. And during this last couple of crazy months, we've had more referrals than ever. And so it just means that you trust us enough to refer your friends and family to us. So thank you, thank you, thank you. If you're not a client of ours, feel free to watch this video. If you have any questions, don't hesitate to call me. You can certainly get in touch with us by going to our website, providencefinancialinc.com. So let me give you a quick update as to where I think we are and where a lot of other people think we are right now. One thing that seems to not be too debatable is that the market is disconnected from reality. The stock market is disconnected from what's going on in the economic world. Different economists have taken that and used it different ways, and there are people that think the market's going to keep growing. I've actually heard more of that in the last couple of weeks than I had previously. And there's a lot of people that think that this is all smoke and mirrors and that the Federal Reserve is just delaying the inevitable, and that really by putting it, trillions of dollars in stimulus, that it's just delayed the collapse of small business. I'm in the second camp. I think that there's a lot of problems ahead, but so we don't know for sure though which way the market's going to go. As much as I tell you, I think that there's a lot of problems ahead, and I think it is smoke and mirrors. I could be wrong. There are a lot of people. There are some people, I don't even know if I want to say a lot, but there are some people who make some cases that we have a good stock market ahead, and I wouldn't even tell you that those cases are compelling. So it's debatable where the market goes from here, up or down. Does it keep growing? Does it not? But it really is not debatable, in my opinion, that the market is disconnected from reality. I pulled up some articles. As I was wanting to just be prepared for you. I pulled up a couple of articles. I'm not going to read the whole articles. I'll just read some headlines, 3 or 4 headlines that I saw that I thought might be helpful. So CNBC, Mike Santoli writes, making sense of a stock market just 16% off its high while pandemic cost 26 million jobs. Not able to make sense of it. That was a title back in mid-April. Fortune magazine or Fortune online, Fortune Corporation, not even sure what their legal name is, but they say 3 million more unemployment claims as real jobless rate soars to Great Depression levels. Market Watch. There's a debate on Wall Street over whether stock market investors know something that the rest of America doesn't when it comes to what a post-COVID-19 pandemic future will look like. And then it goes on. It says more than 20 million people have lost their jobs since COVID-19. Meanwhile, earnings of the S&P 500 companies are falling as if the 2008 financial crisis is repeating itself, and they're likely to get a lot worse. But never mind all that, because the S&P 500 surged 1.7 Friday and has rocketed more than 30% in about 6 weeks. That was written about a week and a half ago. The market's even up more than that now. I think it's up closer to 35% at this point. The apparent disconnect between investor expectations and current reality has driven a widely used measure of market valuation to the highest level seen in 18 years. Disconnect. That's the key word. Disconnect. It's not connected. Motley Fool wrote this. I thought this was very helpful. It's just very good. I've got a 7-year-old, and part of the homework that we're doing at night and that mom does with him is, which one of these 4 drawings doesn't fit, right? Which one of these 4 words doesn't match, doesn't seem to fit in with reality, right? So it's that recognition pattern that he's learning now, as he just starts to get into first grade. Well, you tell me, which of these 4 patterns that I'm going to read doesn't match? Record-shattering unemployment as initial U.S. jobless claims exceed 6.6 million for the second week in a row. Now, this article was a month ago, so they're higher than that now. Confirmed global coronaviruses surpass 1.5 million and continue to climb. Bloomberg Economics recession model predicts a 100% chance of recession in the next 12 months, with a very high likelihood that we already are in one. Number 4, the S&P 500 has its best week since 1974. This was all done a month ago. It makes no sense. Rip it up. Forget about the paperwork. Forget about the economy. This doesn't mean anything else. The stock market is not tied to any reality at all at this point. And it's boggling the minds of a lot of people. So what does that all mean to you? It means that this is time to take a reassessment of your situation. The market right now, without me having pulled out a calculator, I think is only 8 or 9% off of its all-time highs. We're not bad in this position. I'm in the camp, I think it's going to get worse. There are people that are arguing that they think it's going to get better. And from what I've seen, there's a whole lot more people think it's going to get worse than the few optimists that are thinking it's going to get better. But there is an argument there to say we don't know. And I've had that question a lot. I fielded that question a lot from some of you, my clients who've watched my videos. I had one person say, well, why don't we sell everything and then get back in? I had another person say, well, maybe I bought some stocks too soon. Maybe I should wait a little more. Well, we don't know. That's the problem, is we don't know. In a year from now, I'll tell you what you should have been able to do now, right? We know that. But here's what we can do. We don't know whether we should buy or sell, but here's what we can do. You can plan for the best, but prepare for the worst. If you're prepared for another major stock market collapse, and it never happens, you'll be okay. If you are prepared for the best case scenario, hoping that the stock market won't crash, and if it does, it's going to affect your retirement, then if it does crash, you might be devastated. If it doesn't crash, you'll be okay. Let's plan on it crashing. Let's plan on the worst case scenario. If you plan on the worst case scenario and it happens, you'll be fine. If you plan on the best case scenario and the worst case scenario happens, you could be devastated. Let's plan on the worst case scenario. Number 1. The market for several weeks now has been semi-calm. We're only 8 or 9% off of our record highs that we reached back in February. Okay. We're like 35% or 33% off of our record lows that we reached in middle of March. So things have been calm. People aren't panicking anymore. And no good decisions are made when you panic. So when people do panic, sometimes they tend to freeze. So I don't want you to do that, but panic right now is not going on across the board. But if it starts to happen again, you could go back into that state of panic, and I don't want to see that happen. I don't want you to freeze and that happen, but I also don't want you to make rash decisions. No good decisions are made when you're panicking. But at the same time, I'm also starting to feel a sense of complacency from a lot of people. And you don't want to procrastinate out of a sense of complacency. Please take time, look at your situation, look at your portfolio, reassess where you are, reassess the risk that you have. Are you invested for best case scenario? Are you invested for worst case scenario? What happens if the market does go down another 30 or 40 or 50% from here? What happens to you and your retirement if that happens? Plan for that. And I'm proud of you guys because I've received dozens of phone calls asking me that question, wanting to know, are you guys going to be okay? And I've analyzed with you, I've talked with you, we've looked at your numbers, and I welcome a call to do that. Now, be patient with me because every time I do a video like this, I I tend to get dozens of calls, and so sometimes it takes me a few days to get back, or sometimes I might have one of my assistants get back to you. But I'd love to talk to you. The time to prepare and to reevaluate and to reassess your situation is not when you're going over the rapids, right? You don't decide to get out when you're going over the rapids. Now that we're in between rapids, it's time to reassess your situation. That's what I'm going to ask you to do. If you need my help, please don't hesitate to call or email us. But again, I thank you for your trust. I thank you for your business. Hope you all stay well. Look forward to the economy opening up. Ventura County has started to open up restaurants. That's where I live. And hopefully this whole thing blows by and the worst case scenario doesn't happen. But if you plan for the worst, or if you prepare for the worst, no. If you plan for the worst and prepare for the rest, you'll be okay. Please plan for the worst. Talk to me or call me if you need it. Thanks.